All right, let's talk to Ayo. Thank you, Ayo, for joining us again today. Well, the latest foreign trade data reveals that Nigeria's trade deficit hit a record-setting gap of about 2.3 trillion naira, and many believe the CBN's new policy on diaspora remittances can help to address this. I mean, I just spoke with the Director General of Lagos Chamber of Commerce, and he has also called that CBN, the central bank, should extend this policy to even exporters, to foreign direct investors and portfolio investors. From an investment analyst point of view, what are your thoughts on this?
Okay, thank you. I'm sure that CBN would also come up with policy within the to increase liquidity within the FX market in relation to the export segments, like what we saw within the diaspora remittances. I think part of what CBN would have also looked at is looking at where bulk of the FX comes from. If you look at based on data, you discover that over $20 million on an annual basis has been coming in from remittances from Nigeria in diaspora. So I think it's the bulk of that fund that the CBN is also trying to target. So
okay, Ayo. Yeah, Ayo, are you still talking?
Hello? Okay. Yes, I can hear you now. Yeah, so by and large, the CBN is trying to look at, for their angle on how liquidity can be, FX liquidity can be increased by not depending solely on oil proceeds. But as it relates to bridging the trade deficit, when you look at the import data, or the trade data rather, you would also discover that the major segment that was responsible for that decline was the exports, because the production cuts that from OPEC Plus affected our production, and that impacted on what we're able to export. So, and that we feel that will also will continue to impact on the exports even in Q4 and in Q1, pending when we see a major increase in the amount of production that Nigeria can contribute to the global oil production.
Okay, with the OPEC Plus quota on oil production levels, what other sectors or commodities present opportunities to narrow the deficit gap? And of course, we have seen oil price rising above $50 per barrel. What would that mean for us in this regard?
Okay, you made a very valid question. When we look at the trade data, you discover that the manufacturing sector still accounts for less than 5%, which is the area where we need to focus more on. And looking at the manufacturing sector, they account for, the SMEs account for over 60 or 70% of the industry within that space. So if we need to come up with very deliberate policy or incentives to drive the manufacturing sector, you cannot dissociate. If you want to grow our economy, need to see how we begin to add value to our raw materials, and that is what can grow the manufacturing sector. We pick some of the major sectors. For instance, we've been talking about how much of value add after we have harvest. That's also a major area which would also solve our unemployment problem and will solve our FX challenges, and would stop depending on oil. So when there's any major volatility on oil prices, it impacts on the performance of the economy. So it's critical to come up with incentives to support the SMEs within that space so that we continue to add value for what is available in Nigeria. So we don't just export raw materials and we import the finished goods. It means that we're actually creating employment for other people in other countries and at the expense of Nigerians.
So what's your outlook on trade relative to other African countries, especially with the commencement of the AfCFTA deal?
Yeah, it's interesting. The AfCFTA will be kicking off in January, and I'm not sure Nigeria is ready to be able also to take advantage of that. We need to first review this the land border, uh, if we, which is also critical to the performance of how we're able to benefit from the after. And I spoke earlier about the manufacturing sector. This new agreement favors more of the manufacturing sector because they will be able to export their goods across African countries. Yes, that we have that challenge of the quality of some of the things we produce for some of them. But now within the African countries, we would be able to access more market that may not be as sophisticated as the developed market that we export. So this is an opportunity where we need to explore. Transportation would also be very critical for us to be able to take advantage of that, linking some of these African countries. So I believe that yes, the AfCFTA agreement is a positive one for Nigeria, but we need to be able to reposition and support our companies for them to be able to manufacture at a competitive price, and they also be able to export.
Now let's touch on the equities market, which had a swell time in the month of November, a stellar gain of 14.78%. However, there seems to be some kind of reversal of that upbeat mood in December. What are you alluding this change to?
Okay. Yeah, for the equities market, we looking at it from December, it started with some profit taking. And I think last week, the CBN also issued a circular around the special bill, which created some form of what I would say suspense in the market. So for the fixed income market, we know there's a negative relationship between the fixed income market and the equities market. And so for most of the players, the market players were expecting to at least be able to affirm what levels the CBN will issue the special bills. As a result of that, we saw for some investors trying to take profit ahead or reduce their exposure. But when we saw as at yesterday, the special bill was issued. I think is estimated at over 4 trillion at 0.5%. And we also saw the PMA result on Wednesday, and surprisingly, we saw the one-year bill close above 3%. So that also threw some panic into the fixed income market. And as a result, there was expectation that yields would improve. And if yields begin to improve within the fixed income market, it will begin to compete with the anticipated dividend yield within the equities market. So we saw that shock yesterday, especially the banking sector lost about 4%. But as I'm trading this morning, we've seen some of those stocks are already firming up. Investors are new investors are trying to take position and trying to buy some of these stocks at better prices. So we feel that we don't expect this downward trend to persist. Some of the stocks now present better opportunities ahead. Full year dividend that will be declared in the first quarter of 2021.
Now, until this week, we got a sense the CBN was looking to keep rates at low levels, although with twin issuance of the PMA for Treasury bills and the newly issued special bills at 0.50% that you talked about, are we likely to see a reversal in the restrictions of the OMO participants?
Well, we don't expect for now for CBN to reverse that policy around the participation of retail investors and especially domestic investors in the HOMO market. The focus now with the issuance of the special bills yesterday, the 81-day bill at 0.5%, that created some form of clarity in the market, though there's still a lot of questions to be answered around how those bills will also be traded. But we feel that market has begun to take some, has begun to settle, and we believe that rates has improved. Yesterday, rates improved an average of about 100 basis point across the FGM bonds market, and we'll begin to see some demand. We saw that towards the end of the market yesterday, we're also seeing demand. So based on our view, we feel that interest rate will still inch up slightly, but because of the expected liquidity in the system, that's the downside risk that will keep them at check.
Now, do you think these special bills will be a game changer for the fixed income market? What trends are we likely to see in the mid to long term?
Yeah, for the special bill issued by the CBN, we expect that it will impact one on the shorter end of the curve that has been trading at almost 0%. So rates is expected to improve within that segment. And with the tradability, so depending on the tradability, a lot of traders are still also trying to find out the modalities of how these bills will be traded. Until we get that clarity, I won't to say much regarding how much of impact the bills would have across the fixed income market.
All right. Thank you very much, Ayodiji Ebo. It's always a pleasure having you on the program. Be safe. Thank you.
Thank you for having me.